Jimmy, you're playing for a path of least resistance being higher. You bought more small caps. You made a number of other individual moves that I'll get to as well. But buying more small caps, I mean, small caps have had a nice rip here after sleeping for a while. Russell 2000 is up 20% now year to date. Why? Because the last month has been a 10% ripper.
Yeah. Well, look, I do think it's got further to go. I think this is what Bryn was just saying, continuing the broadening of the rally. And as much as it's up 20% and maybe year to date, let's remember it's languished, as you pointed out, Scott, for quite some time. I think the fact that the economy continues to expand, of which there is no question, there really is no question, combined with lowering interest rates, that's a pretty powerful elixir for further small cap growth. And sentiment really plays in here as well. But more than anything, my actions are a very strong agreement with what's been said by Bryn, by Joe, and Steve so far, which is to say the rally's likely to continue, and I'm in cyclicals. I got kind of bullied out of General Motors. I'm not happy about it, but the facts on the ground changed. I had to sell it. It was a very big position for me, and that meant my cash balance raised pretty high. I wanted to get that money back to work pretty quickly, and I did. Not just small caps, but industrials like Wabtec, materials companies like CRH, also bought on holdings where the momentum is terrific. And then finally Adobe, which is, you know, a nod to technology. We haven't been talking about technology leading for quite some time. It just hasn't. It's been handed the leadership over to financials and industrials. It's still going to do okay, and I see a great opportunity in software where the money seems to be flowing right now. That leads to Adobe.
Been talking a lot about, you know, the prospects of a everything rally, that people are positioned that way, at least hoping that, you know, from election to inauguration, at minimum, you're just going to have this tide that continues to lift a lot of boats, some more than others, but nonetheless, it's going to be still an attractive environment for a lot of stuff.
Well, here we are, the first day of December, and you have a reversal of the recent trends. Now, it's one day. What are we, 2 hours into the trading day? But in November, it was all about equal weight. It was about momentum. High growth was the best performing factor in November. So you had financials performing well. You had utilities performing well. You had emerging software performing well. Now we walk into December, and what do we see? We see a little bit of a reversal there. The mega caps making the comeback. You have a lot of semiconductor names that seemed as though they were dormant previously. Lam Research is up 5%. Applied Materials up about 4% today. You also have KLA Corp. So you've got the semis coming back a little bit, and I think it speaks towards exactly what you're saying, which is you could find opportunities in the totality of the equity market, and you just don't want to isolate yourself into one particular factor or equity sector.
Joe, I just want to point out, corroborating what you're saying, if you look at the SMH, it's up about 2.6%. You know what's not leading in the SMH? NVIDIA. I have nothing against NVIDIA. I have a big position. But the names that you spoke about, KLA, or in my case, AMAT, or something like a Qualcomm, those are all outperforming today. My point being, we're talking about the broadening of the rally. It was actually very narrow, the rally in semiconductors, for most of the last several months. It seems to be broadening right now. Look at AMAT. It's up something like almost 5% as I'm speaking.
Well, take a look at Taiwan Semi, but...
Is there an echo in here?
Yeah, well, Jimmy does want to be.
He does want
to be right every once in a while, so that's why I repeat what Joe and I say.
I feel like I added value.
Yeah.
I feel like I added value.
I'm glad you underscored that.
You did.
Well done, Jim.